Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Joe Caccera, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Caccera.
Welcome in, Joe Caccera with Real Estate Radio Live, the podcast series. As we move along through the week, we have an exciting guest I'll introduce here in just a minute. Before I do that, just a reminder, if I could help you in any way of financing a purchase, maybe refinancing, or right now, if you have a outstanding equity line second, really good time to consolidate with the Fed raising the prime lending rate again, most likely a couple more times this year. You don't want to be exposed with the high interest rates or adjustable rates. So any questions about financing, feel free to reach out, 408-838-9060. Also, we have a team of great people that work in and around Real Estate Radio Live, a great network of professionals. If you need a real estate agent, financial planner, tax advice, legal advice, we could help you in any of those areas. Be sure to contact us. You don't want to work with someone you don't trust with such a really important decision in and around real estate. For more information, you can always go to reradiolive.com. All right, let me invite my guest in, Linda Liberatore. She is a founder and president of My Landlord Helper, Secure Pay One. And the topic today we're going to talk about is how to select a property manager. Really important, I'll say before we get started and get kicked off here, that this is an important topic for those people that invest, and there's a lot of people out there either invested or interested in investing. You have to be careful. Certainly one of the biggest decisions you make, but then even more importantly, once you have that investment, who is protecting it for you? Who is staying on top of things for you? Is it being managed properly? All that. So Linda's going to talk about that with us today. Welcome in, Linda.
Hi, well, welcome. Thank you, Joe. I really appreciate you having me out today.
Yeah, it's a great topic, and our show is really the objective, Linda, of our show has been since day one when I started, it's to educate and inform the consumer. So we don't, our goal is not to have them become experts. Certainly, if you want to become an expert, that's great, but we realize people have busy lives, careers, jobs, businesses, so we hope that we could add some education and advice and information along the way. So this is a great topic. Before we kind of dive into the talking points, if you could give our listening audience, Linda, maybe a kind of a brief background of yourself, and then bring us up to date currently with your roles and responsibilities, what you do today.
Oh, that'd be great. Well, hopefully we're going to be offering a lot of value today, because what we've done is we started a company that assists people that are, I'll call it your do-it-yourself landlord. Okay. People that are out there trying to build wealth. They've decided that they want to take their money and invest it in real estate as opposed to their other options with stocks, et cetera. And they feel it's I'll call it the most sound investment. So they are looking for kind of a buy and hold, as it's referred to in the industry. They want to start a rental portfolio. Mm-hmm. So we help people nationwide. Some, as you said, we may be just consulting and helping them select property managers. Others are looking to do it themselves, and they're not sure just which steps. There's a lot of legal stuff to go with it. So we've been doing this a little bit over 7 years. And we work with people nationally, and we go to a lot of national conferences. So we always keep our pulse. I'd say continuing education is huge. First of all, I think in real estate, period, just because it's such a government-regulated industry.
Right.
But, such a government-regulated industry that, as you know, Joe, it just changes from county to county. Yeah. So people have to be really sensitive about understanding when they do get into investing, understanding the laws and the nuances to each of those areas. Right.
Well said. Very good. So why don't you start also, I think would be very valuable, Linda. Give us kind of an overview of the market trends. This helps people kind of get a feel for what's going on out there on the rental markets, investment market, and maybe what you could provide for us from that perspective. Since you do, it's well noted that you guys really do have your finger on the pulse of what's going on out there in the markets and the trends.
Yeah, thank you. Well, again, that's from attending a lot of conferences and hearing people that really give a lot of good information. And one of the last ones we were at, I guess I could share this, that I think would be valuable is, as you may know, or your audience may or may not know, single-family investing is kind of a trend and I'll say a comfort spot for new investors. Because I'll say they knew how to buy their own home, right?
Mm-hmm.
So they feel like they have a little bit more, they can wrap their arms around the whole process a little bit more as opposed to multifamily.
Mm-hmm.
Now there's people that just obviously favor multifamily, just the way Mercedes or an Audi, right? Yeah, somebody favor one
right.
versus the other. So what we see is in the single family, there's some really popular areas that are becoming, I'll call it new hot spots, if you will, because that changes all the time. So, for instance, a couple of years ago, I think you would have heard Fort Worth, Texas, different cities in Texas were really hot. But now the prices are starting to go up in those cities. So we just heard like Birmingham, Alabama, being a big one. People are investing in the Alabama markets. Some different cities now in Tennessee are becoming more popular. Ohio, so different states, I'll say trend, and then all of a sudden it kind of catches up where all the investment. We're competing, I'll say as U.S. citizens, against a lot of foreign money, also looking to come in the U.S. and invest in real estate. So they still see our real estate as a really good, sound investment. So we still see a lot of that. So it seems like when a city, again, was really popular and then all of a sudden its prices are going up. So what causes it to be popular is prices are lower or reasonable to get a home. But the rental prices, and again, I assume you know this, but maybe not. Some of the listeners may not realize that rentals have done nothing but trend upward. So the actual prices of the rent has gone up. So if they can get in what they refer to as kind of solid B areas, there's usually some good cash flow on those properties. They can buy the property at the right price, do some, fixing up to the property if they buy it at an auction. They can do some, I'll call it kind of basic, sometimes maybe not so, depending on what they buy. In the way of rehab, and then they go ahead and rent it, and the amount of rent compared to if they do finance it has just provided them cash flow right to begin with,
right. You'd mentioned, Linda, you said, I think you believe I heard you right, you said B properties or B. What do you mean? Is there like an A, B, C, or is there different categories that you would?
Yes, there is.
If you could explain that to listeners, that'd be great.
Yes, so in other words, they kind of refer to as your higher-end properties, maybe, let's say, and this obviously varies by city, so I can't give you just, let's say, a graph, but I would just say a higher-end property would attract a higher income level tenant.
Okay.
So they'll refer to that as the A property, and then the B property might be more of your working class, but it still tends to be an area that maybe is more owner-occupied versus rentals. So you start to see, you'll be looking at those percents before you invest, let's say. And then kind of your C properties are a little bit more on the lower income and a little bit more rentals versus others.
Got it.
Now, they'd refer to C property. Some people would tell you they'll only invest in C property because that's where there's bigger spreads. So, but with those bigger spreads does come, let's say some bigger headaches. So there may be more phone calls. There may be, as the investor, you may have to be involved, if you will, a little bit more in that type of market.
Got it.
So, you'll get people that have an appetite for each of those. I would say A is probably least desirable for somebody just starting out only because the spread isn't there,
Okay.
So generally, if you buy that house, let's just say, and I don't know what are homes, let's say a nice home selling for in your area, and then you figure out the mortgage, there's just not that much spread on the rental of what you can get. Does that make sense?
Yep, it does. So tell us a little bit about, you mentioned Dallas. I know that's been really one of the popular spots. You hear a lot about investing property and incomes and cash flow. And so I think, can you share with us, or do you have a point kind of where you could tell the audience, maybe people are starting to trend out of Texas into some different states or areas. Are you aware of some of those that you see on your radar?
Well, and again, I don't usually work on the purchase end, but I
Oh, that's right. Okay.
But that's okay. I get this information more from conferences. So we had a really good speaker. In fact, one was from the Federal Reserve himself, and I can't recall the other gentleman's name off the top of my head, but IMN has a large national conference for single-family home investing.
Oh, right.
And they just had this in May. And they were talking about one popular city right now that they see on everybody's radar was like Huntsville, Alabama. And what drew it, and I'm not going to remember the specifics, but if I didn't want to mess up my computer screen right now, but in other words, lots of industries there, and I'd be able to quote you those industries. But lots of industries. We've got government industries there. You have, military nearby. So you have a lot of good, I'll call it solid reasons why people would move to the area, and prices on those homes currently are a little bit, let's say, a lag compared to how Dallas, let's say, took off. Yeah. And once it became hot and it was known to everybody that it was hot, well, now the prices have been driven up, right? Okay. So they mentioned that in May. I don't know. Today's July 19th, right? Or July. So, that changes. I'm not sure when we'll go live, right? Okay. So that does definitely trends and changes.
Very good. Well, we're gonna take a break here in about a minute. But before we do that, what are some of the things that a person should know, that one should know before investing in property? Maybe we could just kind of start there, and then when we finish up with this, we'll take a break and come back.
Well, I guess I'd say as my top rule, I think I would make sure that people don't watch too much late night TV and think that it's all easy. Passive is not a word that I would equate with real estate investing. That being said, there are certainly avenues out there. People, there's always a business for a need. So I'd say there are businesses that have been driven by that need of, let's call it professionals. Maybe they're, doctors, dentists, whatever. They have a very full schedule in their day, and they're looking to invest. There are certainly what they refer to as turnkey operators out there, and those operators are specifically for that busy professional that really does want a passive investment. So, I mean, it's available and it's out there, but you just don't want to assume that buying an investment property would be passive.
Very good. All right, this is Joe Kuchera with Real Estate Radio Live, the podcast series. We're going to take a quick break. When we come back, we're going to continue talking to Linda. She is the founder and president of My Landlord Helper. She's offering some great information and education on how do you best support your rental properties in selecting how to select a property manager, and also some of the stuff you could do yourself. We'll be back with you to continue in just a minute.
For more information on today's program, visit reradiolive.com. That's reradiolive.com.
Hi, this is Joe Kuchera of Real Estate Radio Live. Thanks for tuning into our podcast. We are your go-to resource for all aspects of real estate, including buying, selling, refinancing, building, and legal and tax advice, and much more. You can subscribe to Real Estate Radio Live podcast on iTunes and Stitcher to listen to an engaging discussion about anything and everything real estate. So make sure you get our app, RE Radio Live, in the iTunes store to follow the show.
Welcome back to Real Estate Radio Live. For more information on today's topic or guests, just visit reradiolive.com. That's reradiolive.com. Again, your host for today's edition of Real Estate Radio Live, Joe Kuchera.
Welcome back in. Joe Kuchera with Real Estate Radio Live, the podcast series. Today, our guest is Linda Liberatore. She is the founder and president of My Landlord Helper, and the topic today is how to select a property manager. Linda was kind enough to give us a little overview of the market, and then we discussed right before our first break, a little bit how or some of the things you should think about before investing in property. But let's jump now, Linda, and get into, well, actually, before I do this, if someone wants more information about your services or or more details, how you might be able to help them, or pick your brain, quite frankly, what are the best place for them to reach you or get a hold of you?
Well, we do have a website, and that we have a couple. I'm going to say mylandlordhelper.com is one of them, kind of describes our business. They can also, Joe, email me direct and just mention your show. I'd be happy to help anybody with any, let's say, follow-up questions. And I would be at Linda L., so it's 6 letters there, Linda, and then the initial L, at securepay1.com, and we spell out one, so SECUREPAYONE.com.
Great.
We're on Facebook, Twitter, all those social media, so they can find us any way they can. But again, for your audience, they can just email me, and I'd be happy to help.
Great, thank you. So let's talk a little bit about, because where you really help people and where you have a niche is, walking people through the process and really supporting them. To me, it sounds like almost like a hybrid situation. You're not a property manager. So what are some of the most common mistakes you see with the whole kind of do-it-yourself, process and project, so to speak?
Well, I guess I would say that the thing that I would say kind of troubles people the most is I think that for a good majority of people that come to us, they got into it. Most of us have like a pretty big heart, right? Mm-hmm. So you get into it and you start investing, and then there's a human touch to it, and it's pretty hard to handle it like a business when they're so totally involved. So I think the first thing is to stand back and realize that while you're definitely dealing with lives, you are setting up your first small business, if you will. And so especially when they have plans to accumulate additional properties and they get started, you have to remember, like, right from the start, like little things like they'll say, I was going to collect the security deposit, but I thought, well, I can just do that later. And then they come to us, and it's 6 months later, and things have just way gone off track. Mm-hmm. So it's like you just really want to think about it from day one like a business, So that means all the legal documents, everything that goes along with owning an investment property. When you're done with the closing, you're not done. You now have to get yourself a lease. You want to know the process, know the local laws in your area. And that doesn't mean, you have to study a book on the local laws, but certainly be willing to either do a legal Zoom or work with your attorney that maybe helped you with the purchase the property, for the closing. They should be able to guide you through, what's the basic lease. And, some states are very landlord-friendly, and some states are just opposite. They're very tenant-friendly. And so you kind of want to know that. That's some of the first things you should know when you get started.
Very good. Let's move along. What about selecting a property manager? So how would one go about, again, just like anything else, one of the wonderful things I say all the time is, the information highway, if you will, and the internet and all this stuff that's going on. There's a lot of great information out there, but the trouble sometimes is who do you know to trust? Where do you go to get trust? So how do you select? How do you go about that process?
Yeah, and Joe, you nailed it. That is the biggest issue is, I think, the trust issue. And we all know that because it's like we have, if we go back in time, there was a phone book. Now we can Google it.
Yeah.
And I'd say we're fortunate. Statistics show that especially millennials are not moving forward with a purchase of anything without skimming through the reviews. So I would say I'll call that really good advice. Now, you want to apply some judgment to that advice, especially because now we're getting into, I'll call it a higher profile, where you can win or lose money a lot quicker, right? Mm-hmm. If we just go with simple math, if a home is $1,000 a month, if it's going to rent at $1,000 a month, you've got a lot more to lose if you didn't pick the right manager, right? So you remember, and I'm going to separate this a little bit. Realize, maybe for your audience, that they don't realize that there are people that just do the function of leasing agent, and you can search that. And what that person does is help you find a suitable applicant for your property. And there are lots of, I'll call it general rules that go along with that. Checking their credit score, making sure their income is qualified. There's a general a rule of 3 times the rent for your income, just the way a mortgage broker does that when you qualify somebody for a purchase. They use the same type of a rule for a rental. So you want to be sure that they're applying those rules. So those are discussions I would have. Some people hire the property manager to place the tenant, and others use that as a separate, they use that as I'll call it a system of checks and balances. Either way, you'll be charged approximately 1 month's rent. But in the example I gave, as you know, through real estate agents, they bring value to the table, because you can hear people, I'm sure, in your world will say, I don't need a real estate agent, I can do that myself. Right. But a real estate agent knows a lot more about the market. Well, I would say the same applies true for placing a new tenant. If you have a good leasing agent, and real estate agents do it as well, and they know these, I'll call it kind of rules on 3 times the rent, making a credit bureau, and they really have their pulse on what the rents are going for in that area. If you could do it yourself, Joe, for $1,000 a month, but that they could bring you somebody for $1,100 a month, then they've just paid what many people feel is a very costly fee of charging, 1 full month's rent. Well, 100 times 12, you'll have made up their fee. So if they're good at what they're doing, you're not really at a loss of the 1 month's fee. Right?
Yeah, that's a good point. So when you talk about, a little bit about, should you shop price, I think let's go into that a little bit here. In that, what you're suggesting, it's true. I mean, if you're talking to different potential property managers and someone says, for instance, well, my fee's 10% just for sake of this conversation, and you're like, wow, most people are 5 or 6 or whatever the conversation. What you should do is have them explain to you why they charge that amount, and you might be enlightened, or you might have some. In other words, would that be the suggestion if someone? I mean, because there's so many different variables, isn't there? I mean, there's it's all across the board in all of our businesses. What would you suggest? The kind of questions someone would ask if someone seems to be a little bit higher, but they have a good reputation?
Yeah, I agree with you, Joe. I would tell you that I think integrity is everything. I think definitely I would want references. So that's my biggest thing. And sometimes I'm often shocked at how people don't follow up on references. I think that's true whether you're screening an applicant or a property management company. Yes, they may give you 3 of their favorite clients, there's no doubt. But first off, I would ask for somebody that has a similar portfolio. So if somebody calls us for services and they have, let's just say, a 2-flat, and I give them a reference to the guy we have with 180 or 250, well, that's not a good reference. You know what I mean? Because that's not comparing apples and apples, right? So we always say, give references out that are most in line with what you're looking for. So ask for the people that have 1 property or 2 properties and see how they're getting treated. See what they say. I think people come to us that have been with full property managers, and most often it seems to always be communication. So I would say you need to know up front what is their communication plans. And I say that, Joe, because it's really, as many as there are different people, there are different styles for how we like to communicate, how often we communicate. So you and I, might say it's fine to text each other, but if it's something big, you want an email with it, pictures, etc. And some other people might say, I don't want to hear from it. Kind of like we said, the passive investor, he may say, if it's less than 500, don't call me, but he, you know what I mean? Does he want to see documentation? Do they have software that you can log in and see that yourself? Can you expect a report once a month? How hands-on, it's just really, it's a different level of control that we all have different expectations, right? And you need to make sure that your expectations are in line. And if you're a person that likes a lot of communication, don't hide that during the interview process. Say that. Say, you know what, I'm somebody that really would love to hear from you, as each event occurs. Just shoot me an email. I'm not going to second guess you, but I want to know what's going on.
That makes sense. It really does. We have about a minute or so left here. Linda. So what I want to do is maybe just kind of wrap it up by any other areas to watch for. I mean, you gave us a really good kind of checklist of things to be aware, how to select, what some of the stuff, and of course, people could always go back to your website or contact you for more details. But any other kind of a summary or area that you'd tell people to watch out for?
I think I would summarize it, I think, best by saying it's definitely the integrity of the firm and the relationships they have and how they're going to communicate with you. So you want to know about what relationships they've established. I'm really big, too, on continuing education. So let's just use the example of if somebody is offering the best rate, but they're really, I'll call it antiquated, out of the market. Yeah. They're going to just keep things afloat. Then is it the best rate? So I think you do want to know that what are they doing to stay abreast on all the new technologies that are hitting every industry? Are they on top of that, and how will that help you? And so I think I would definitely say it's the integrity, the relationships that and their communication style that you need to be aware of.
Right, very good. All right, unfortunately, we're out of time. It's been a great interview, a lot of good information. And again, we want to assure Linda real quickly before we go, the website, and it's the best way for people to reach out and get a hold of you.
Sure, they can go to mylandlordhelper.com. They can also just email me at lindal@securepay1.com. And that's SECUREPAYONE.com. And we do also have a couple books. I mean, if they're interested, I'd be happy to help them with those as well, So whichever way we can help, Joe, I'm glad we can bring them some value if they want to get started.
All right. Appreciate your time today. This is Joe Kuchera with Real Estate Radio Live. Thank you again for tuning in. Remember, for more information, you can go to reradiolive.com. Until next time, take care.
You've been listening to Real Estate Radio Live. For more information on today's program, visit reradiolive.com. That's reradiolive.com. Subscribe to our podcast. Discover more at reradiolive.com.